Okay, here is what we have. This is one of the trades that we took. So this is what we had: an order block here, price went down, and then it gave us a mitigation block. So we're expecting price to get to this level here, and then we get to see price drop. But if we go to a smaller time frame and we just look at the smaller time frame, what we have here, so you can see that if you look from here, we have an order block here at this level here. So this is 50% of the order block being indicated. So price get to this order block and then it went down, okay, creating some liquidity void and also leaving behind a mitigation block. So let me just remove this as it was for the higher time frame. So let me just remove it because it lines up with the smaller time frame. So I just remove this so that we can be able to see clearly what we have. So if you switch to 4-hour time frame, we look at 4-hour time frame. Let me just make this smaller a little bit. So if you look at 4-hour time frame, this is what we have. This is the last down candle, okay? This is the last down candle here that made the lower low, okay? So this is the last down candle that made the lower low. So this is gonna be the candle that we take as our mitigation or as our level where we need to sell, okay? So the high of the candle, it's gonna be our stop loss, okay? So this is the zone that we expect price to get into and then go down, okay? But we don't expect price to go above this. That is why here this is gonna be your stop loss, okay? So whenever you are looking at a breaker structure or you are looking at the mitigation structure, you're always gonna take the last down candle, okay? And that last down candle, the high of that last down candle, it's gonna be your stop loss, okay? So you get to look at this is gonna be our stop loss. So we expect price to move within this area here, but never to take out this high here, okay? So this is gonna be our stop loss, 10 pips, 5 pips away or 10 pips away this high here. So but if you look at here, you get to see that we have something so interesting here, which is a fair value gap at this level here. So we have a fair value gap here, we have a fair value gap here, we have a fair value gap here. So these are fair value gap that needs to be closed. So definitely, in as much as we are expecting price to get to this level here and start to push up down, so looking at this fair value gap here, which lines up with what we have here as our mitigation block, so it gives us an idea that we might see price just closing in this fair value gap, okay, because it lines up with the mitigation level. So price use the mitigation level and also this fair value gap. So you will be looking for entries at this level here. So price get to this level, push down a little bit, and then pull up a little bit and then push down. So let's take you are afraid of taking the trade here, you are not sure what's gonna happen. So this is one of the reason I always say you go to a smaller time frame, or in that time frame you look for sell profiles, okay? So if you get to look at this level here, price got to this level, pulled down a little bit, and then it came back, it got to this level here, never took out this high, okay? It never took out this high. Price failed to take out this buy side liquidity here, and then we get to see price push down a little bit, and when price pushed down a little bit, it took out this low here, okay? So there is a shift in market structure by looking at this. also remember, when we look at our breaker or our mitigation block, it's an indication of a shift in market structure. But now this is a confirmation also that we are going down. Okay, so when price does something like this, what you're gonna be waiting for is price to pull back to get to this level here, and then you can have your re-entry at this level here. So let's take, you missed the trade here, you can catch the trade here, because definitely now you know that our price is most likely to go down, because all of a sudden we get to see these are highs, these are highs, these are highs. As price was going down, was going up, I mean, it takes out the previous highs. Why? Because it's in a bullish market. Okay, but the moment you see price failing to take out higher highs, that indicates that we are now going down. So you get to see price take out this. What you're gonna be anticipating for is just a retracement to this level and price continue to go down. And if you look at this level here, going to a smaller time frame, I believe that's gonna be a mitigation or something like that. So if you look at this level here, this is the level of your mitigation here, and then you take your position here. And also if you look at this, but before I show you that, let me show you what happened first. So you get to see that price formed a low. Okay, so this is the low. If you look at here, we have this sell side liquidity that is resting here. We have a lot of equal lows here that needs to be taken out. So price came back, took out these. Okay, when price took out these, it went up, get to this level here of your order block. You can sell short here, you can sell short here, and price went down, taking out everything here, and come back to this level here, come back to this level of your mitigation. It gets back to this level of your mitigation and continue to go down. So you can have re-entries here, here, and here if you miss this setup here. Why? Because when price get to, there is where PDRA metrics, the understanding of PDRA metrics, because the moment we get to see something like this taking place, the moment we see a breaker or a mitigation in the bigger time frame, it now indicates a shift in market structure. So what took place here, it was an indication of a shift in market structure. All of a sudden we see price was going up, and all of a sudden now we get to see that we have a mitigation and price respect that mitigation and it went down. Okay, so that's an indication of a shift in market structure, that we are in a bearish market structure. So it will be wise for you to look for sell opportunities here as price go down. So that's how you need to just look at the market. Don't complicate things, just take your time, study the market, study everything, the material that is available to you,